Despite the fact that central banks and banks globally will value gold at market prices, the US Treasury Gold reserves are given a book value of $42.22. Today we explore why and ask whether a gold revaluation would actually strip the Fed of its gold claims. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. Now, the status report of US gold reserves document highlights the book value of the physical gold owned by the Treasury. A note states at the bottom of the page that the Department of the Treasury records US government-owned gold reserves at the value stated in 31 USC 5116-5117 statutory rate, which is $42.22 per fine troy ounce of gold. The market value of gold reserves based on the London gold fixing as of September 30th, 2020 was $493.4 billion. So why not simply use the market value? Well, if we look at the 31 USC 5117 US code, it states that the amount of outstanding certificates may be not more than the value for the purpose of issuing those certificates of $42 2/9 a fine troy ounce of the gold held against gold certificates. The Secretary shall hold gold in the Treasury equal to the required dollar amount as security for gold certificates issued after January 29th, 1934. So there's a couple of important points to note here. First, that the outstanding certificates may not be more than the value of $42.22 per ounce, the statutory rate and not the market rate of gold. And second, that the Treasury Secretary holds the gold equal to the required dollar amount, not a physical weight-based amount, while the Federal Reserve owns gold certificates. This is made clear in this excellent clip with the outstanding Ron Paul.
Question: during the crisis or any time that you're aware of, has the Federal Reserve or Treasury participated in any gold swaps arrangements?
The Federal Reserve does not own any gold at all. We have not owned gold since 1934. So we have not engaged in any gold swaps.
But it appears on your balance sheet that you hold gold.
What appears on our balance sheet is gold certificates. When we turned before 1934, the Federal Reserve did own gold. We turned that over by law to the Treasury and received in return for that gold certificate.
If the Treasury entered into, because under the Exchange Stabilization Fund, I would assume they probably have the legal authority to do it, they wouldn't be able to do it then because you have the securities for essentially all the gold?
No, we have no interest in the gold that is owned by the Treasury. We have simply an accounting document that is called gold certificates that represents the value at a statutory rate
and still
that we gave to the Treasury in 1930.
And still measured at $42 an ounce, which makes no sense whatsoever. But you know, the conventional wisdom today says that gold is really not money. We don't want it to be money. I mean, if you're for the gold standard, there's something wrong with you. Yet we hold the gold. And, you know, there have been suggestions made, and I've sort of, encouraged the suggestion. You know, if gold is not money and it's an asset and you don't even use it because it's on your balance sheets and you don't even use it at the real value, would you have a position on this? Why shouldn't the Treasury just sell the gold, give it back to the people? The people had it at one time. Let the people have it. Would you have any objection to that? Would you advise us and say, no, that's not good. We ought to hold the gold. Do you think holding the gold is a good idea or a bad idea?
So I have no position on that at all. That's clearly
no position.
Treasury. It's a matter for the Treasury. It's not within the purview of the Federal Reserve.
Mr. Baxter, would you have an opinion?
My opinion is I agree with Mr. Alvarez.
No position. Well, it's amazing because I've asked questions of the Federal Reserve, the members of the board for years, and whether it's been Mr. Greenspan, can't recall exactly what I've asked Mr. Bernanke, but it's always, well, no, we have to hold on to these assets. But if it's not money and we don't need it, we're not going on a gold standard, I mean, I would think that they shouldn't be holding it. The reason I ask that is, the truth is gold is money, and people don't throw it away, and people do cling to it. But I would be really, there's a lot of people who suspect, because of this lack of transparency, that there's been a tremendous amount of gold swaps and loans made, and central banks sold a lot of gold after these the last 10 years. A lot of the gold has left the West and has gone to the East. And the central banks that now have positive trade balances, they buy up the gold. There has to be a message in there and a significance, even for those who don't want the restraints of gold. It has to be a message out there that we should look at, because we're in a financial mess. And it has to do with our monetary system, and it's being reflected today in rising prices and a weak economy. And just printing all this money isn't doing any good. All this stuff that's been done for 3 years, and you look at the economic statistics now, they're horrible. And these people who lost their jobs, they're still unemployed. The people who bought stocks in the year 2000, if they held on, they probably haven't even broken even. They probably lost purchasing power. So eventually, I know this is off the subject a little bit, but it is reflected only in that we don't know exactly what goes on. And people, when they don't know, then they get suspicious and they say, well, it's kept secret from us. Why aren't we allowed to know? And we just march on. And the type of dollars we're talking about, and when we hear about this money going to central banks and banks that Gaddafi was a part owner in, I mean, this stuff is this really stirs up the emotions of a lot of people. But I do appreciate you being here, and I know that there'll be a lot of questions. There will be written questions submitted, and we'd appreciate your cooperation and send us our answers back. And I thank you.
Thank you very much.
And on the Federal Reserve's balance sheet, we can see the claim on gold stock is equal to $11.041 billion. So the Treasury holds the physical gold entitlement largely courtesy of the stores held at the US Mint, which totals over 248 million ounces. And the Federal Reserve holds over 13 million ounces, but its claim is via certificates. In this great article, Bullion Star's JP Koenig believes that this is due to the wording of the certificates, which entitles the Fed to that $11.041 billion of gold. Now, JP likens this to having a coat tag ticket for a $200 coat rather than the specific coat itself. The gold certificates specify a dollar value rather than a weight of gold, as we can see here. Thus, it appears that if gold was revalued in line with the current market value, the gold certificates could deprive the Fed of a huge amount of gold. Just take 11.041 billion and divide this by the current gold price, around $1730. This gives just 6.382 million ounces, a reduction in the Fed's gold claims of over 97.5%. Revaluation in line with the market rate would thus seem to pass the vast bulk of physical gold to the US Treasury. But given we have Yellen and Powell working in concert together, does this even matter? Well, the gold certificate's entitlement to such a large amount of gold helps to offer some credibility to the Fed's balance sheet, which has grown progressively weaker within the actual asset structure of the assets that the Fed owns. And this I previously highlighted in this video. The over 261 million ounces of gold certificates provide substantial ballast and a huge amount of credibility to the Fed. But revaluations of the gold price have taken place before, as we can see in this chart. Yet it seems that these certificates would need revising greatly, for what a tragedy it would be if the Fed were to lose their claims on this gold. Fascinating stuff. Now, do let me know your thoughts. Thanks so much for watching. Do consider subscribing, and I look forward to seeing you next time. Bye bye.